Hi everyone, Donna here with Bookkeeping Made Simple, and today we are going to unpack the basics of accounting for small business owners. Now, if you're a small business owner that needs accounting help, this video is most definitely for you. If you need help, but you don't feel like digging through all the mountains of paperwork that's sitting on your desk or all the computer files that need your attention, or if you've got thousands of transactions sitting in QuickBooks that you just don't even want to look at, I'm talking to you. We are going to go over the basics, the boring books, the overwhelming differences between debits and credits. And yes, they are a little bit on the confusing side. We're going to talk about all of these things. So, and the regulations involving some of the regulations, not all. So if you are looking for an easier way to navigate the world of accounting that comes with being a small business owner, then when I'm done with you, you're going to be able to confidently put on your paper hat, put on your green shades, get out your calculators and your pencils, because this is going to start to make a little bit more sense. So, it's always fun, isn't it? We are going to talk quite a bit about this. It is truly a challenge for a lot of small business owners. They see the need that they have, but they don't know how to go about getting all this done. And the number one question I get asked is, where do I even start? How do I even know where I'm at? So, first of all, the very first part, if you've ever used a checkbook, you should know how to do this. And I realize that just by using the term checkbook, everybody out there knows that I am at least Gen X. So that's okay. Back in the day, we used to have a checkbook. It was basically a one little ledger, and you put in the money you got and the money you spent. So that's the very first step. What are your expenses? Believe it or not, right now, it's kind of hard for a lot of business owners to figure that out, because so many, the most wonderful, convenient ways of paying bills is to swipe a credit card and then set up automatic payments. And so there are business owners that don't know what's being taken out of their bank account. There are people that just don't know what's being taken out of their bank account. And I have heard someone say recently that you need to worry more about the big expenses than you do the little ones. Well, here's the problem with that statement. Basically, this was a wealth management website or Facebook page, and they were saying, oh, don't worry about the Starbucks latte if you have a $700 car payment. And to that, I can say, bullshit. I'm sorry. It is a load of crap. That is baloney. Let's just kind of unpack that one thing, because this is something a lot of people don't think about. You go to Starbucks, and a cup of Americano drip coffee is $5, sometimes $7, depending on the size. If you order something fancy, it's even more expensive. We won't even talk about what it does to your waistline with all of the creams and sugars and stuff. Some of those Starbucks drinks are very calorie dense. Well, you spend $5 on a single cup of coffee 5 days a week. Well, 5 times 5 is 25. That's $25 a week. That is over $100 a month that you could spend somewhere else. But the trick is not necessarily to say buying coffee at Starbucks is bad. I'm not here to tell you that. The trick is to know where your money's going, so that you can then say, I don't want to spend the money on Starbucks coffees. I would rather buy coffee at home and brew it at home. I want that money to go to hiring a house cleaner, or I want to invest it, which, by the way, I highly recommend. So the very first step is to know where your money's going. And that does get a little tricky, especially if you're married or you have a partner. If you have a business partner or a life partner, or you're married and you have to have this talk, oh, it can get tricky. So all you want right now, step one, is the facts. How much money do you bring in and where does it go? I have actually seen people use the the shoebox method for this, which is a great idea, which means that for the first week, you get a receipt for everything, you shove it in a shoebox, and at the end of the week, you take out your shoebox and you look at where your money went. The problem with this is, again, there's a lot of people that pay their bills online and they don't realize how much is coming out of their checking accounts. But the shoebox method's a great place to start. Number two, you want to learn to monitor your profit and loss. And this sounds like it's really easy, right? Your revenue is the money that comes in, less your expenses, the money that goes out is your profit. It's not always that easy, because when you get into accounting, you start to find out there are expenses that are non-cash, such as depreciation. Okay, I can depreciate my car whether I have a car payment or not. Maybe I paid cash for the car at the beginning, and now I want to depreciate the cost. There's a lot of things that can be done. Or maybe I paid cash for my E&O insurance. Since I'm an accountant, I have E&O and workman's comp. And now I need to figure out, what is my monthly charge for that? So those are the first two steps. Number three is, it is practically a 4-letter word, that is to create a budget. People don't like this. They don't like it for the same reason they don't like going on a diet. And that's why I call my diet an eating plan and my budget a spending plan. Again, you're the only one that can decide where your money should go. But where an accountant can come in, such as myself, we can suggest ways that, well, if you spend it here, it will multiply. If you're spending it on advertising, you're going to get more clients in the door. If you spend this much on advertising, what should you expect to get in the door in sales? We can start analyzing all those. But the very first thing is to know what you're bringing in, know what you're spending, and then to decide how you're going to spend that money. Going back to the Starbucks thing, if you may decide that I need that ritual of going to the coffee shop, and that's fine. But then you may decide, well, that's $100 a month that I could put somewhere else. I don't want to give up Starbucks. Is there something else that I could change? Or it's the other half of it, which is really nice when you own a business. Do I want to increase my revenue by $100 a week or a month? See what I'm saying here? If you know where the money's going, do you know where it comes from, you can start to make informed decisions about where to put it. That was one of the hardest things for me to actually overcome, as I was a young single mother. I was very, very poor most of my adult life. I grew up rather wealthy, but once I didn't make the best decisions with husbands. And so I paid for that financially as well as, time-wise. And then I kept having to restart my careers. I needed to restart my I always had to start over, often with a new place to live and new furniture, and then replace all the clothes for my kids, because I had a rather poor dating history. So I wanted to make sure that I knew where my money was going, because one of the things that I learned to say was, I can't afford it. Today I know I can almost always afford it. I just can't spend the way I was spending and still spend money on this. So kind of by way of an example, I just recently came back from Kentucky, where I spent 3 weeks with my mother. And when I say I spent 3 weeks with my mother, and I adore my mom, I adore both my parents. I mean, I spent 3 weeks basically sitting in the next room, listening for her, if she needed anything. I wasn't really doing a lot of extras for her. It was a lot of making sure she ate, making sure she got dressed, making sure that she was clean and neat, which she prefers to be. She can't see as well as she used to, so making sure that she could see what she was doing, and also helping her understand that the changes she's going through are completely normal, right? So this trip was almost a requirement. This was so important to me, for me to be able to go back east, be with my mom, be a resource for her, give my dad and my youngest sister a break from being the caretakers. It was critical. I had to go. I mean, I guess I didn't have to, but it was a top priority for me. So when I started to look at where can I rearrange I never said I couldn't afford it. I knew I could do it. I just had to look for good deals and rearrange my funds so that, maybe I can get rid of the $150 cable bill for internet and I can replace it with a $50 cable bill. Maybe I can look into spending less money here so I can spend more money over here. That's all a budget is. It's making a plan. You need to know what you're spending. You need to know what you're bringing in so that then you can make a plan. Now, number 4, assets and liabilities. A lot of people really, really struggle with this because when they do their household budgets, they take a list and they write down what their paycheck was. They don't account for any payroll taxes, what their net pay was. And then they start adding up all the things that need to come out of that check. Oh, I need to put money aside for rent. I have a car payment. I have car insurance. I have credit card payments. Well, when you're doing business accounting, we don't do that. When we do business accounting, the budget covers expenses, not liabilities. So we also have to look at your cash flow and start to look and see what are the requirements for you to pay off your liabilities. What are your minimum payments? And I use a lot of the same principles that I've heard many, many times, like the debt snowball. If I have a client that's kind of upside down, I will start looking into, can I, what is the smallest balance we can pay off first? Just to start building that momentum. Okay, we paid off the $300 balance. Now let's pay off the $500 balance. Now let's take the 300 and the 500. That's 800. Let's put that towards the next biggest liability so that it becomes manageable. There are some tricks with liabilities. One is you need to make sure that you are looking at your current ratio to see if you can afford the payments on the loan for the next year. And that is where an accountant can come in and help you. We can run those payments. We can look and see if, or what I just did, is I was asked, how much can I afford to pay an employee? And in one case, the employees in question were the owners of the company. In another case, the owner wanted to redo the compensation plan, but he wanted to make sure that he was able to comfortably afford it. There's really, it's hard when your labor costs are so high that you can't run anything else. So he wanted to make sure his labor costs were managed, and he wanted to make sure that, and this other company also wanted to make sure that they could pay what the going rate was for their industry. So I started looking at their numbers, and one of the things that I look at is how much can the employee bring in to justify their wage. Now, we are going to have, as your business grows, you're going to end up with more administrative employees, but your sales employees should be bringing in, your payroll should only be about 30% of your total expenses, or 30% of revenue. So if you have a $30,000 revenue for the month, your payroll should only be about 10 grand. That's so that you can cover things like all the other stuff that goes into running a business. So we need to look at your liabilities. We need to look at your assets. And on the balance sheet, there should be an asset for every liability, to be honest. So what we're looking for is if you bought real estate through your business, we're also going to look for a mortgage. If you bought a car through your business, we want to know if you financed it or if you paid cash. Then we're going to add that liability. We need to know all of this stuff so that we can put it in and make sure that you have the information you need when it comes to deciding whether or not to take on more debt. Also, get used to payroll taxes. I tell my clients, count on 15.6% payroll tax. What? It's that much? No, it's not. It's 7.65% for the employer side. But you also have to worry about garnishments. You have to worry, you want to make sure that you can pay this comfortably. And if you're paying yourself as the business owner, you could be on the hook for both sides of it. So get comfortable with it. You're going to have payroll tax. It's just a cost of doing business. Just like when you receive your check as an employee, most people just look at the net pay. They don't even realize how much is coming out in taxes. I want the employer to have the other side of that. Look at the gross pay plus payroll taxes, and that's your expenses. Going back to the budget, though, stick to it. And a lot of those budget numbers are going to be percentages. I really need to cover that in a later video. What if things are complicated, though? I mean, I tell people all the time, I went into accounting because I was going to be a software engineer way back in the day, like pre-Microsoft, when Microsoft was just coming on. That's what I wanted to do. I wanted to be a systems analyst and software engineer. So I went into computer science. But then I had kids and marriages, and I was 3 years in Germany, and I came back and the entire profession had changed. So I decided not to do that anymore. And I looked at it and said, accounting hasn't changed in 500 years. Debits and credits are still a thing. We still do double entry accounting, which, by the way, was invented in the 1400s in Italy. We still do that. Nothing much has changed in 500 years. So I was like, I can keep up with that. But there's still a lot of regulation that comes into play, right? So what are your deadlines? How often do payroll taxes need to be filed? Do you have sales tax? What are your deadlines for that? There's a lot of deadlines that go on. We put them all on a calendar. I put tasks in for my staff to make sure that it gets done proactively. The last thing I ever want is for someone to say, you missed a deadline. Okay, so, and by the way, those deadlines change all the time. Compliance changes all the time. It is a pain in the neck, but we stay on top of all that because we do not want our clients to ever come back and have missed a deadline or to have penalties and interest assessed when they shouldn't have been. Next up, software. We use QuickBooks. In fact, we use QuickBooks Online. We use it exclusively. We are Elite Pro Advisors with QuickBooks Online. That's the highest tier you can be. We do a lot with it. I live in it, and I spend a lot of time teaching clients about it, teaching my staff about it, little things it can do. A lot of people don't use it to its full capacity. Some people don't need it to its full capacity. So some of the things that we do is we will look at QuickBooks and then determine what tier of service do you need from QuickBooks. We have a package that we start with. It's the lowest one. It's one of the lower ones. And I talk to my clients and try to educate them about what do they need to do, what QuickBooks package do they need, and then we make decisions based on that. It makes things so much easier. But again, you still have to review those financials. You have to understand what they're saying. That's okay. That's something we can help with. And the final thing, I tell this to my staff all the time. There's very little in accounting that can't be reversed. So if you categorize something to the wrong category. If it should have been dues and you put it to marketing, we can change that. If it should have been an asset, but you expensed it, we can change that. Don't be intimidated by the process. One of the things I really love is when people ask me thoughtful questions about accounting. It is an interest, and I have people all the time saying they hate accounting, they hate bookkeeping, they hate anything to do with taxes. I get it. Okay. But it's challenging, and I really like the challenge. I love taking a look at a client's books or a potential client's books and seeing what can we do to help them make their books look better. In other words, how can we help them? Because we don't deal with Fortune 500 companies. They have armies of accountants. We deal with very small businesses. And when I say we want to help your books look better, I mean, we want those bank balances actually going up. We want you to have money to invest. We want you to take care of the little individual things that big accounting firms just aren't interested in. They don't do this for most of their clients. They certainly don't do it for their small clients. They do it for their great big ones, but it's expensive. We do that for all of our clients. And then we refer them, if you want to start saving for retirement, I have someone for that. If you have a more complicated tax return than I can do, I have someone for that. I don't ever leave my clients ever out to dry. If it's a problem I can't solve, I know someone who can solve it. Our goal is to help our clients become truly financially free, whatever that looks like to them. So, accounting's not as scary as it seems. And it's a little bit more than just counting beans. But if you have the right attitude and you work with a really good professional, it can actually be interesting, challenging, and fun. Thanks for watching, and I'm looking forward to talking to you again soon.